Hi folks, Alex Klingelhoeffer here with Exencial Wealth Advisors. It's 8:01 here in the middle part of the country on Monday. It's July 26, 2021. Here's your morning jog around the economic headlines of the world. We've got some big news out of China. The markets are down quite a bit, or were down quite a bit. Of course, their markets are closed at this point. Chinese markets down 3% and 4%. Why are they down? Well, the Chinese government said private education companies can't make profits anymore. They can't make profits. They can't take money from outside investors, and they're encouraging companies to really switch industries now that they have these new regulations. Of course, that sort of contagion spread throughout their market. Those stocks were down about 30 or 40%. Now the overall market there down 3 or 4% is where those indices closed. It's really just an increasing regulatory environment in Beijing. Really interesting to see a couple of things. First, if we're going to see additional tightening regulation from Beijing, from the Chinese Communist Party, it's really bad for business. It's generally why when we talk about allocating a portfolio, we tend to have an overweight towards U.S., towards larger companies, and here domestically versus international companies, emerging companies, because we have the best governance in the world, both from a leadership perspective in the U.S. and at the corporate level. Believe it or not, although we have government that everyone here in the U.S. likes to complain about, at least we're not nationalizing institutions. That's a very good thing. If you're an investor, it gives you additional transparency over the long term towards your investment process. So it'll be interesting to see, as sort of a corollary to that Chinese market crackdown, Bitcoin really took off over the weekend, topped about $39,000, really jumped from 31, 32,000 straight up to 39,000 over the weekend. Perhaps some folks got an early leak about that Chinese crackdown. Of course, Bitcoin is a very, very big part of China's technology sector, right? That, of course, the government's trying to crack down on it there too. But when you think about it, okay, if I'm a Chinese investor, right, I can literally buy a crypto mining farm in China on sort of the black market, or I could buy some of these Chinese publicly listed stocks. I think there's a big correlation between capital fleeing China and the price of Bitcoin going up. Will be very interesting to see if that correlation keeps going on. Get tighter capital controls in China, Bitcoin's price goes up, sort of makes sense. That narrative passes the smell test. Lastly, before we get you off to a nice week, Aon and Willis Towers Watson have called off their merger. Of course, we talked about that quite a bit last, it was in quarter one probably, maybe early quarter two, when they originally announced that deal, said, hey, it's really not very competitive. It would lead to about 90% or 85% a consolidation of all the business in some of their key markets. We thought, hey, this probably is a challenging deal to get done and get through regulation here in the U.S. Looks like there will be $1 billion termination fee from Willis Towers Watson to Aon Hewitt on that deal. Again, it's good to see some regulation here in the U.S. markets. Getting 90% market share is generally pretty anti-competitive. If you want some additional information throughout the week, feel free to follow me. As always, here on Twitter, it's OKCCFACFP. Until then, hope you have a good Monday and a good week. I am out.